It is important to remember that value investing is not a perfect science. It is with an ongoing need for judgment, refinement, patience, and reflection. It requires endless curiosity, the relentless pursuit of additional information, the raising. One thing I want to emphasize is that, like any human being, we can discuss our view of the economy and the market. Fortunately for our clients, we don't tend to operate based on the view. Our investment strategy is to invest bottom up, one stock at. I know of no long-time practitioner who regrets adhering to a value philosophy. Few investors who embrace the fundamental principles ever abandon this investment approach for another. It turns out that value investing is something that is in your blood. There are people who just don't have the patience and discipline to do it, and there are people who do. So it leads me to think it's genetic. Value investing requires a great deal of hard work, unusually strict discipline, and a long-term investment horizon. Few are willing and able to devote sufficient time and effort to become value investors, and only a fraction of those have the proper. If an asset has cash flow or the likelihood of cash flow in the near term and is not purely dependent on what a future buyer might pay, then it's an investment. If an asset's value is totally dependent on the amount a future buyer might pay, then it. The latest trade of a security creates a dangerous illusion that its market price approximates its true value. This mirage is especially dangerous during periods of market exuberance. The concept of private market value as an anchor to the proper. In a world in which most investors appear interested in figuring out how to make money every second and chase the idea du jour, there's also something validating about the message that it's okay to do nothing and wait for opportunities to present the. Typically, we make money when we buy things. We count the profits later, but we know we have captured them when we buy the bargain. As Graham, Dodd and Buffett have all said, you should always remember that you don't have to swing at every pitch. You can wait for opportunities that fit your criteria, and if you don't find them, patiently wait. Deciding not to panic is still a. Hold cash when opportunities are not presenting themselves. At equal returns, public investments are generally superior to private investments, not only because they are more liquid but also because amidst distress, public markets are more likely than private ones to offer attractive opportunities to average. One of the biggest challenges in investing is that the opportunity set available today is not the complete opportunity set that should be considered. Limiting your opportunity set to the one immediately at hand would be like limiting your spouse to. Short-term performance envy causes many of the shortcomings that lock most investors into a perpetual cycle of underachievement. Watch your competitors not out of jealousy but out of respect, and focus your efforts not on replicating others' portfolio. When people give away stocks based on forced selling or fear, that is usually a great opportunity. Targeting investment returns leads investors to focus on potential upside rather on downside risk, rather than targeting a desired rate of return. Even an eminently reasonable one, investors should target risk. A value strategy is of little use to the impatient investor since it usually takes time to pay off. The strategy of buying what's in favor is a fool's errand, ensuring long-term underperformance. Only by standing against the prevailing winds, selectively, but resolutely, can an investor prosper over time. But for a while, a value investor typical Because investors are not usually penalized for adhering to conventional practices, doing so is the less professionally risky strategy, even though it virtually guarantees against superior performance. Quotes famous. Thank you for watching.